Well, hold on. It's setting up. Hold on. Okay. All right, so let me know when you're ready, and we'll get the party started. Or
I'm tweeting out the link now.
all right, good. I have some people on Zoom waiting. Let's just do something home. All right, let's get started, Joe. How about that?
Okay.
Let me just let these people in.
Yeah, I just tweeted out the link, so.
All right, Joe, we're gonna give
I think with some of the people you're letting in, just kill their video, I guess.
Mute. Are you live on YouTube, Joe? Or no?
Yeah. I just tweeted out the link, and I'm ready to go.
All right, so let's get started. What I have here on my screen, if you can see it, can you see my screen?
Yes, I can.
All right, so what I have here on my screen was the top names that reported over the last week via market cap: Apple, Amazon, Microsoft, Google, Facebook, Visa, MasterCard. Those top 8 names, the reaction so far, if I'm not mistaken, has been down except for Google.
Yeah, it's been. I always say it's not the news; it's the market's reaction to the news. And there's been some great earnings reports, but they're not being treated well, both after hours or even in the regular session.
Which one had? I know you mentioned I know you mentioned what do you call it? Shopify.
Yeah, Shopify, and there was a couple others. Overstock had decent earnings. Shopify, Etsy, they all had great earnings, and they were sold off. They weren't sold after hours; they were up. Shopify was pre-market. Etsy was after hours yesterday. They were sold off in the regular session today.
Right, and that's just. Are we gonna? Is that just the market, or these stocks were way too ahead of themselves? And that's the reason why.
Yeah, no, that's a great question. I mean, some of these are priced for perfection. Some of them are priced in. The market is a little bit weak right now, so it is tough to get a read on that. But I think that just tells us that just tells us, the reaction's not good. So it's just telling us things, to maybe yellow light here to slow down a little bit in the markets. Because not only are we below the 50-day and all the averages, but the earnings are coming in strong. Amazon did like a gazillion in sales and crushed their numbers. It was down after hours. So I think the reaction right now is just telling us to be a little bit cautious, because I think the market's looking for clarity right now.
All right, and the SPY is down about 7% from the 12. What is the 10-12 peak?
Yeah, October 12th peak. Yeah.
Like you said, we're below the 50-day moving average. We are below the 21-day moving average, which has been of significance for the averages ever since April.
Yeah.
Let's see the Qs. They are down roughly also 8% since the 10-12 high, but just until maybe yesterday or 2 days ago, most stocks were holding up extremely well. They weren't moving, but they were holding up extremely well. And I know I put up a chart of MTUM, which is the Momentum Fund
Yeah.
ETF, and it was holding up well until the beating that we took on Wednesday.
Yeah, I thought we were forming a handle to that October 12th high, and we were just coming right down to the moving averages, forming a handle, but then we just gapped right below that. So I agree with you. I think things were holding up pretty good. However, I think there's three big things right now. The election uncertainty is one. The COVID cases all over the world, especially in Europe, is spiking, so that's not good. Stimulus, there's a lot of people and companies and small businesses that are looking for more stimulus that are unfortunately going to be shut down for a while still. So that is also upsetting the markets. And I'd actually had a fourth thing, sentiment. The last couple of weeks while we were coming down in the middle of October, sentiment was actually increasing, which I found very very surprising, that people are very complacent. So I think the market is shaking out some of that excess bullishness right now.
Right. And I'm going to touch base on some of these things that you mentioned. I'm not a COVID expert, but you mentioned COVID, right? You mentioned COVID.
I don't know. I mean, everyone is, right?
Right. I was surprised that with the COVID, with the numbers, that ZM, Docu,
Yeah.
Netflix, they were holding up well yesterday. Then today, out of the blue, they took a hit. Peloton.
Yeah, I know. France, temporary shutdown in some things. Spain, you know, where it's spiking in Europe. I agree with you. That's why it's weird. You know, the whole who cares about the news? It's the reaction. You would think shutdowns, not only were they not up, they were hit pretty decently today with the Nasdaq up.
Right, right. I mean, look, it could be that people are finally starting to realize that, hey, that it's really not important how many people get COVID, but who gets it. It's more of an elderly problem. That could be it.
Yeah.
Right. And then we have the elections. All right. So this can be an uncertainty until when? The third, next week, or
It just depends. There's a bunch of scenarios. People don't know if the market's pricing in a Biden win, if it's pricing in a Trump win. If Biden wins, I know Leon Cooperman said take $20 off of S&P earnings because he's going to raise corporate taxes and capital gains taxes. Now, that's going to depend if the Republicans maintain the Senate. I hate getting into the politics, but it's not like if Biden wins, okay, taxes are going to go up the next day. So it's also going to depend if he has a majority, in the House and the Senate. And then the fourth thing is the whole thing everyone's talking about, the contested election. If it's a 2000 Gore Bush case again, where with just the lines for COVID, the lines for voting, the mail-in ballots, that's the uncertainty right now. I know a lot of people are talking about it. Some people are saying everyone's almost expecting for us to not know the winner on Tuesday night, but I mean, nobody knows. So maybe the market just wants some clarity. It doesn't matter who wins. The market just wants to get through that uncertainty. That's
all right. So then the next one is the stimulus. Let's say, for example, whoever wins, how quickly can that come? If it's, for example, Trump, it's got to be at least 2 weeks.
Yeah, I mean, they're not agreeing with him now, so maybe they're waiting and stalling to see if he's going to still be in there. And if he's still going to be in there, are they going to continue to stall? And then if Biden's in there, are they going to wait till end of January when he's inaugurated? That's not going to be good. So
right. And here's the issue, Joe. I want you to clarify this for the people who are listening. and who are going to listen to the broadcast after we're done,
Yeah.
are you going to wait until you actually check off all these uncertainties, or until they're already clear for you to, if you find something that's actionable, are you waiting for these things to clear before you make a move?
I think the market will give us a little bit of a sign. I'd like to get back above the 50-day. I'd like to find some setups. Um, but right now, if you want to call it a longer term uptrend, shorter term downtrend for depending on your time frame, I trade short to medium term, and right now we're in a downtrend. So I don't want to fight that until I see things stabilize. And more importantly, if I find a lot of setups.
Right. So, right. The point I was trying to make is that you're looking for price to stabilize, not necessarily the uncertainty to become certain. Eventually, the market will price something in.
Correct. I don't care about the news. I care about how the market's acting and setups and the price action more than the news.
And I think that's where people get held up, where they are, macro tourists, and they're thinking about all these themes that are out there, and they're trying to figure these things out and play chess with these type of, a COVID stimulus election, and all these different things, instead of letting the price action dictate what they should do next.
Yeah, if we were above the 50-day and stocks were setting up and things were acting well, I could care less um about the election because I would just be trading the price. But right now the action is not that solid. So I'm just going to wait for things to firm up. Um We started to come down, as you said, things were holding up really, really well. Like a week or so ago, the indexes were acting very, very well, little distribution. Uh, a lot of stocks were hanging in pretty good. There was some selling beneath the surface. But I think the biggest thing, we both do our work every night is, and we were talking about this last week, there's all of last week, I couldn't find any setups. I couldn't find any nice consolidations to buy off of. It just was really weird. I would screen. I'd normally find a bunch of setups. I wasn't finding too many. A couple that I was finding weren't working. And that's to me what I judge the health of the market on. Now, I look at about 10 or so sentiment measures, and there was a handful that were like pretty bullish. So from a contrarian point of view, that's not good. The market tends to fool the majority. And I think everyone was a little bit, not everyone, but a lot of people were complacent ahead of the election. So then now you fast forward to this week. Monday, down day on heavier volume. Tuesday on the Nasdaq, we're up on lighter volume. Wednesday, down on heavier volume. And then today, up on lighter volume. So we've had 4 days this week, 2 down on heavy volume, 2 up on light volume. I need that to flip over to show that the institutions are supporting the market with strong volume, not selling on heavy volume and then letting it rise like it did today on light volume.
And even today with the rise in the Nasdaq, I don't know about you, I didn't see any individual stock with any momentum, any mojo. Like that,
No.
I don't think I saw like that fear of missing out like we normally get when we're down, multiple days in a row, or when we're down 7 to 8% in a month. There was no enthusiasm to get involved in anything for the most part.
That's a great point. I didn't feel any FOMO at all today. Some of the stuff on my watch list, it was the indexes grinding because of sector rotation, but I didn't see anything, you know, on a day like today, you would have expected the usual suspects, the Microsofts, the Teslas, all the leaders, Apples. You would have expected. I agree with you. I didn't really see anything sort of run away. And then, like you said, the big four announced earnings. It was what, 1, 2, and 1 after hours.
Yeah,
With
so Amazon is still down the after hours. Google, that is up.
yeah.
What was the other one?
Facebook was about the same. It shot up and then went down. They had great numbers.
Down.
And then
Um,
Apple's down. So it's like almost like one. Facebook's, I don't know. I didn't see exactly, but it's like 1 and 3 or 1, 2, and 1 after hours.
and Twitter.
Twitter got
Twitter's
hit
that,
after hours.
that doesn't count, but that got hit.
Yeah, and then I know Team got hit a little bit. Seattle Genetics, SGN, got hit down $10 after hours. That's been a leader in biotech. So a lot of these, I haven't dug into their reports. I listen to conference calls once in a while, especially if I don't stop myself out and become a long-term holder on these things. No, but I didn't dig into all the reports. A lot of them had great numbers and sold off. So again, the big question now is this going to be a, potential leg down, a bigger correction, or do we just need to chop around until we get some clarity? And then fourth quarter, seasonally, November, December, two of the strongest months, do we have resume the uptrend then? I'm just going to wait and see and wait patiently. But right now, I'm not a fan of the price action beneath the surface.
Right. And for those watching, let me make a suggestion to you guys. I'd say the same thing all the time. Ask questions. You want to make this really interesting, ask a lot of questions.
Yeah.
You have a pretty strong bullpen here, so just ask away. A lot of experience here. So ask away so you can make this interesting. As far as what I do, Joe, any time that I get stopped out, if I get 2 intraday stop outs, I immediately slow down. I immediately reduce size just because that rarely happens. And that's what happened to me last week. I had some decent setups based on the way I see things, and I was stopped out intraday.
And that's a yellow light to tell you to slow down.
That's for me immediately. I forget what stock they were, but
doesn't matter. I know exactly what you mean. I know exactly what you mean. They start to consolidate, they set up, they don't go. We were talking about this last time. When they get setups and they're all going and the market's really, really strong, sometimes I won't even wait for anything to trigger. I'll just buy it in the consolidation because things are working. Now, when I see setups, I agree with you because they're not going, I'm not taking them. Or if I am, super, super, super light because A, they're not going, or B, they're trying to go and they're reversing. Somebody said, Neo and Pins went crazy. Yeah, I mean, Neo had a good day. Of course, it's not everything going down. Pins had great earnings. They had incredible earnings. And of course, there's some pockets of strength, but I look at the whole thing as a whole. So I'm not going to be saying, okay, this, like Jesse Livermore says, don't judge the health of the market based on one stock, good or bad. So I'm looking at it as my entire watch list. Of course, a couple of them were, Neo was on my list. I didn't trade it, but of course, a couple of them did well. But the majority of them were pretty ugly beneath the surface. And the overall markets were up on very light volume today. And that's just, I want to see the institutions come in with conviction, not just, just a normal retracement of Wednesday's big loss.
Right. And on that point, lately, if the fangs, if the fangs hold up, the market holds up for the most part.
Yeah.
Once we lose the fang names, that's when we have issues. That's where the big money's at.
Yeah, and then we get a day of sector rotation where maybe the 10-year goes up a few basis points or the 30-year or whatever. Yields are up like 10, 20 basis points. So people rotate into financials, they rotate into value, they rotate into some of the cyclical names. And then everyone says, well, can we jump into those? And my response is, I'm not going to chase the sector rotation. That's just temporary. And if you try to keep up with the machines, you're going to get run over. And personally, as a growth manager, I like to stick with more growth names. I'm not a big fan of cyclical names because literally financials have been dead money for the longest time. I'm not going to chase a 1 or 2 day pop in financials.
Right. Here's the FANG names: Facebook, Apple, Amazon, Netflix, Google, Microsoft, NVIDIA, all as one with the 5-day and the 21-day moving average. The red is the 21-day moving average. As you can see here, ever since April, it has acted as support. And right now we are underneath that level, and we're going to have to wait and see what happens to see if we get back above that 21-day moving average, which again, I believe it's important in this case because it has been important over the last few months.
Yeah. We got our good friend Jay Woods asking us our thoughts on ICE. ICE. Thanks for tuning in, Jay. Love Jay. He's one of my favorite people on Twitter, and I know you would agree with that.
Yes.
Thoughts on ICE. Held the 200-day and had a nice bullish engulfing candle today. I'm going to look at it on MarketSmith to look at their numbers. And if you want me to share my screen, I'm happy.
Yeah, you can share your screen. ICE has been going sideways for a long time. Wasn't ICE buying Who was ICE buying that was just out of this world, just completely out of left field? Was it eBay?
I don't remember. It says here acquired Ellie Mae for 11 billion. But you're right. There was some, I mean, Jay would know, but let me pull up my screen and take a look here. Share screen. Let me pull up Market Smith. And I mean, it's slow and steady earnings. They've gone from $2 to over, $4. It's been slow and steady. He's right. I like how it's held the support level around the 200-day. I think it just needs time to build its new base. Yeah, he did say eBay rumor. Yeah, he did say that.
Right. Right.
That's a good memory. I remember something. It's now coming back to me. But pays a 1.3 dividend, held its 200-day. It just needs time. It's one of those slow and steady with a lot of these exchanges. They're printing money. They pay dividends. They're just slow and steady. But probably just needs time to build a new base. But yeah, as long as longer term time frame, that 200-day is a great area for longer term time frame. As long as it holds that, it's fine. I'm a little bit more short to medium term, so I'm going to use the 50-day, which is the red line, but the black line here is the 200-day. So it's nice that it held it on good volume, and the earnings are just slow and steady. So
Joe, if you don't like it, just something that you don't like it, Joe.
I I I I like Jay, and I don't want
Right.
to.
Gee.
No, it's one of those just whatever. I'm looking for sexy growth stories, and it's not a growth
Doesn't
story.
right. It's not it. Right.
Yeah, yeah. So Jay left, so he doesn't have good. Is the market pricing in a Biden win? No idea. That's a great question. I have no idea.
Does it matter? Do you need to know?
I honestly think the Fed is more important than who's president. I don't think it matters who's president. And not to get into politics, it just pretty much fact. We've had bull markets under Republican and Democratic presidents. We've had bear markets under Republican and Democratic presidents. So the
Right.
Fed interest rates and earnings is way more important in my mind than who's president. I don't think it matters.
Over the long term, not what's going to happen over the next month or so.
Yeah, no, over the long run, let me see. I was just going to pull up the Nasdaq chart for the people who hopped in late. This is what I was talking about. This is a daily Nasdaq chart. We were down Monday. It was on a little bit higher volume, so that's distribution. And then we popped a little bit on Tuesday on light volume. And then we gapped below the 50-day on Wednesday on heavier volume. And then we were up today on lighter volume. I don't mean to micromanage, but you'd rather see the up days. You got a couple distribution days in here. You'd rather see the up days on stronger volume and the pullbacks or the sideways days on lighter volume. And we're below the 50-day, and we gap below the 50-day. And I'd like your opinion on this, Frank, because gap below the 50-day, I'm going to take the S&P 500. I'm going to give you 3 examples. Okay. When you have a gap below the 50-day, which is a very strong support level, it happened here in late February when all the COVID news came out. We had a gap below that red line, and we started to have a downtrend. I'm not saying that that's what's going to happen here. I'm just saying we had a gap below the 50-day on Wednesday, and it's possible that this could be the beginning of a downtrend. I'm open-minded to that. When I show you what happens in 2000, let me show you 2018, because I'd love your opinion on this. This is the second example. Let me go to 2018 October. We had a gap when beginning of October here, Fed Chair Powell said he's going to raise rates 3 or 4 times over the next year. The market couldn't handle that. We gapped below the 50-day and ended up with another decline. So that's 2 examples of a decline. Now, I know that's a small sample size, but to me, I always look at gaps below the 50-day as not the greatest thing. However, we did have a third example, which was Brexit. This is end of June 2016, just to give people a little bit of perspective. We gapped and sliced below the 50-day. And then I think when the market realized it wasn't that a big deal and wasn't going to affect the markets, we snapped right back and we had a shakeout. So 2 times in recent memory, the gap below led to a downtrend and a correction. And then 1 other time we just dropped and had a shakeout. Of course, nobody knows what's going to happen this time, but I was curious what your thoughts are on that.
Uh, well, the sample size of three, right?
I mean, it doesn't happen too often. I look at it as a
um,
gap below support is not exactly
and
the
the
be- the best thing.
and the stuff and those examples there was uncertainty around those examples. Listen, I look. I mean, what do you do? Right. So right, you're right. So we had a market that was down 7.8%, or it's down 7.8%, just going down. It can't even bounce. Now we get a gap lower.
Yeah.
I think you're right. I think if we can't get above the 50-day moving average, and pretty soon it might be an issue. So if I was a bear, right, which I'm not, I was short until we get back above the 50-day moving average, right? If we wanted to make this information somewhat actionable.
Well, if you were a bear, you've been shorting for 10 years and you're probably dead by now.
Right.
So
Right. But if I was a new bear, then that would be the case. And then look, you can make it as simple as it can possibly be. Is number one, as of right now, you got to be cautious until we get back above the 50-day moving average, and or we get that follow through day, whatever it is, 4 days up, and the fifth day, is that what it is? Fifth day on heavier volume.
yeah, 4 through 10. Yeah, days 4 through 10 off of the lows.
All right, so
Yeah.
right, so in a situation like this, Joe, we have people here who are watching. What do I do with my portfolio?
I think it depends on your time frame. I think it depends if you're a trader or you're an investor and you need to have that plan and have a plan. Um, we're more traders. So when I say I have heavy cash, cash is for traders and we can make decisions and I have no problem getting back in. I've used this line a million times. I love Stanley Druckenmiller's line, which is he said, and I'm paraphrasing, one of my greatest assets is my ability to change my mind quickly and be flexible. So if I say I could be on margin one day and I could be heavy cash a couple days later and vice versa. So it doesn't mean I'm changing my mind that quickly. I'm just the markets move quickly and you have to be able to adapt.
The markets are moving now. We were just talking about this week on Monday, that years ago, this type of you would get, for example, the sideways action before something big, months in advance.
Yeah.
Now it's happening within a week, where we're just waiting to the very last minute to price something in. But also on that point, I think it's important for the people out there is that you continue to do your homework every single day. And I think that's important, that right now the market's on the distribution. We're, possibly in the correction, but you have to continue to track these stocks on a daily basis. So that way you are still in tune with the market. And when we finally turn the corner, you are ready and you're not waiting for it to pull back again, because that's what usually happens. People wait, market finally turns around, and then they say, well, I'm not going to get back in, I'm going to wait for the next pullback, and it never comes.
Yeah, I think your comments the last couple of times we've done this have been right spot on as far as smaller positions and give them room and just chill out. Because I think too many people, usually see one or the other. You see people's portfolio in 100 stocks or more, or you see them super concentrated in like the whole portfolios in 2 or 3 stocks. I think you need to find a happy medium. And I think if you're getting chopped around and one day up, one day down, and you're getting chopped up, you've mentioned this the last couple of times we've done this. I think it's brilliant. Just keep smaller positions and chill out, relax, and give them a little bit of room.
Right. All right, let's go to some of these questions.
Yeah, there's a lot of questions here, so that's good. You asked for questions, we got them.
Yeah, you want to knock them out?
Sure. Any expectations for end of the month rebalancing? I feel like it's already happened. I feel like when the month, there tends to be mean reversion when the month is strong, because we were up very, very strongly into that October 12th gap a couple Mondays ago. I think the market's already come down and we're pretty much, slightly negative, maybe flat to negative on the month, depending on the index. So I feel like it already happened. I don't know if you have any thoughts on that one.
No, I don't. ZM is down below the 21-day. Yes, it is. Etsy, what happened with Etsy? Etsy looks okay to me.
So this is what I mean for people who hopped on late. Etsy on MarketSmith here, you have 2 quarters. It's very rare to see a company growing earnings and sales. I mean, that's a monster numbers. Earnings and sales triple digits. And it sold off. That's why I always say it's not the news, it's the market's reaction to the news. So there's a couple thoughts here. Either one, it's priced in, and it needs time to base again, or two, it just after the market resumes its uptrend, this might build. Yeah, I mean, it did hold its 50-day, the red line here. Maybe it just does this and then holds its 50-day, builds a handle in here, and then it's ready to go. Excuse me, after we get through the market uncertainty. But I personally would rather see this as the type of price action. I'd rather wait and let it prove itself, because if it proves itself, then that means we potentially have a 6 or 8 week type of sustained uptrend that's tradable for swing traders like myself and like yourself.
Right here, thoughts on Baba. Baba and the rest of these Chinese names, JD,
PDD is another one.
PDD, DADA,
Yeah.
NIU, NEO, they all been holding up extremely well.
Yeah, that's a great point. Whoever asked that, it's a great point. Baba's held up very, very well. It was up today nicely. It's been holding up. JD is trying to come out of this consolidation here. There's been good call buying on both of these. Some unusual activity. PDD had a really strong, gap up through this. It's just working. This could be a double bottom or it's some sort of a base. I just like to connect whatever lines I need to justify my position. But either way, this is a consolidation that it's trying to come out of.
You have NEO and NIU.
Yeah, NIU is another one holding up well for e-scooters in China. We talked about NEO, which is one of the I mean, yeah, that's up 16% today. That's for sure. Monster, a little bit extended here, but yeah, absolutely. Some of these are holding up very, very well. So the China names are holding up well. I'm a fan if you're going to trade these to try to gravitate towards the bigger cap Babas and JDs because they're more reliable. You can trade the smaller cap names, but if I am going to trade them personally, I'd like to gravitate towards the more institutionally backed names.
Right.
I think even Baidu came back around recently. Yeah, it's working on a new base. Yeah, so
cybersecurity stocks getting slammed. Thoughts on CRWD?
Yeah, some of these were holding up great, but when they start to break down below their 50-day, they just need time. Some of these software names have reported great numbers. Fastly hurt the group a little bit in the sense of it just reminded everyone that they're priced for perfection. And if you have a little hiccup because they're trading at 30 to 50 times sales, which is, historically a rich valuation, I think it just sort of gave a hint to a lot of these holders that, they're priced for perfection. So yeah, that one is slightly below its 50-day. Okta's sitting on its 50-day. There's a couple other ZS. They're just sitting right on their 50-day. So they're not by any means broken down. I just, again, want to see these prove themselves and see how they react around that key support level.
Right. And on that point, look, a lot of people have a tough time when they're short-term swing traders taking losses immediately. They just can't do it.
Right.
So my recommendation is always to go and go with a 20% stop, which is a wide stop. But you have to go back into each of these names, OKTA and the Amazons of the world, and you need to look at a chart and annotate these charts and see how big some of these pullbacks are, just so that way you are ready when they happen. Because these stocks are not going to go up in a straight line. Like I have an Amazon chart here from June. If you can punch it up, Joe.
Yeah.
We had a quick 8% pullback in June. We had a 13% pullback from the high in July, and then followed by 11% pullback and the 18% pullback. These are decent pullbacks that you need to be aware of. And one of the best things you can do is just make a library of these charts and just annotate these charts.
Yeah.
So that way you understand that these things happen, that sometimes they're going to come all the way back down and touch the 50-day.
But I thought stocks only go up.
No, they go
only
down
go
too.
up.
Yeah,
we need a green hammer. That's what we need.
that's right. That's what we
We
need.
should start
Green
selling
hammer.
green hammers.
That's
Yeah, no, you
nuts.
make a great point, and it's something a lot of the IBD talk about. People talk about too. Is take a step back and look at weekly charts and look at the bigger picture. And also the great point about marking up charts. I think it's important to mark up charts to know that things don't go up every single day and they're going to have corrections and pullbacks. And that's perfectly normal to see that in stocks. So it's a really good point to mark up the charts. And the more charts you look at, the more you'll understand what's normal and what's not.
Right. CME is looking weak by contrast versus what? Versus ICE. CME.
Oh,
Yeah,
yeah,
that
look at
looks
that.
weak.
Yeah, CME was a monster back when it IPO'd like 20 years ago. Um, I don't know if it's because commissions coming down. I don't know if I don't know what it is exactly. I mean, this has been earning $6.80. It seems like every year, but um,
Well, you could,
yeah,
talking about commissions, you could, look, all these discount brokerage houses uh, are, commission free now, and they're opening accounts left to right. But these stocks are pretty much on, by near 52-week lows. Interactive Brokers, Schwab.
yeah. Look at CBOE too. I haven't looked at this chart in a while. This one looks like CME just slowing. Yeah, the earnings start to slow down, so the stocks slow down because the earnings have, topped for a while. They pay a dividend because these guys print money, but yeah, the exchange stocks, and was it MKTX is the bond one? That's still holding up really, really well.
There's also VR. Is it VRTU, which is not an exchange, but it's
Yeah, Virtu
is,
Financial,
yeah, is what
VRTU, if I get the right symbol in there. Um,
is it that one?
no, wait, what's the symbol for Virtue?
That's the one with they do the
Oh,
fast.
VIRT.
Okay. Is that it?
Yeah, provides quotes to buy and sell securities for other financial
Huh.
instruments. Yeah, it's not an exchange, but yeah, they've had great numbers. Just same thing. These exchanges, they were monsters years ago. They've just been so it does pay a
Uh,
4.5% dividend though.
yeah, I don't think that's it, but I don't know if it's that one. But also FUTU, which is another Chinese name, holding up
Yeah,
okay.
yeah,
Um,
that's Chinese online brokerage. Let's see what else here. Joe,
someone's
you
asking
mentioned
about DKNG, right? Let's punch that up, Joe.
DKNG. So um, this was a base on DraftKings at 40. It broke out, went up over 50% to 60 something. 50% of breakouts come back to retest their pivots. So this came back to retest their pivots. Doesn't mean it's going to bounce, but it's like sitting around. I mean, normally when you get a 50% move, you'd want retrace half of that, and maybe form some sort of a higher level handle here. But this thing hasn't shown the ability to bounce. It's just been very, 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 very weak right now. And I know a lot of people love this stock, but it's the price action is just not strong. I would have been stopped out of this below the 50-day, and I just think it needs time to reset again.
Right. So let me tell you what happens with some of these stocks, right? This stock was a great looking chart. And, here's what happens. Sometimes we look at something like Penn, and Penn goes straight up. And then we think that DKNG is going to do exactly the same thing.
Yeah,
And every trade is random and unique. That's number one. Number two, what's important with some of these averages, they are potential levels of support. They just don't bounce off there for, at those levels. It's not a guarantee, right?
of course, of course.
And number three, a lot of people fall in love with broken momentum stocks. Okay. Like a Fastly.
Oh, the whole world loves Fastly, and I don't mean to make fun of people, but literally people are in love with Fastly.
Because of what just happened, because of the type of run that it had over the last couple of months.
Yeah, because when it goes stick straight up in the air, I mean, the whole world sees this when they just go stick straight up in the air, and they forget that this was a $20 stock earlier this year, and then it goes from 20 to 136. The thing goes up 5 or 6 fold. It's priced for perfection. Same thing with Livongo. Like there are people in love with Livongo, and they're like, this is the future and telemedicine and all that. I agree with that. I'm just saying it just went from 25 to 150. What do you think? The market is just discovering the story? I mean, you have to consider the moves they've already made that they could be priced in. That's all I'm saying.
Right. And not only that, don't fall in love with broken momentum stocks just because of the previous price action, because that's people get involved thinking that what just happened is going to happen immediately after they buy the stock.
Correct.
It
Recency
doesn't
bias.
it doesn't work that way. Saw
Yeah.
something about whiskey and I jumped in. Yes, 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 yes. Uh Joe, you mentioned at one point during the rally, people chasing the rally may be getting into the fangs as a safer liquid option. Could the fangs maybe lag as money moves elsewhere now?
Yeah, I mean, it's a great point. I think the fangs are sort of reliable, liquid, reliable earnings. I think they're gonna, to your point earlier, as the fangs go, so will go the markets. As you know, as the leaders go, so goes the market. So, if the fangs have trouble, yeah, you might get sector rotation into other things. But at the end of the day, Wall Street wants to see growth, and these are the big growth reliable names. So, I think even if you're not in them, it's important to watch the fangs to watch the price action on them to get a feel for the market. So I still think they're pretty, you know, reliable, safe for liquid. I hear what he's saying, but we'll see what happens. I mean, I'm curious to see over the next week or two. I mean, Microsoft so far had great earnings and it gapped below its 50-day. And so far, we'll see if it maybe stabilizes around this, 195, 200 level. Maybe it puts in some sort of a base on top of a base here. So I don't think they're done by any means. I just want to see them prove themselves. And if they do, I still like, some of the bigger cap Nasdaq 100 names.
Right. Here's a question I think for me in the chat on Zoom. Sometimes you talk about how many stocks are going up versus how many are going down. How do you use that information to take decisions to be more bullish or bearish intraday? Right. I only use that information so I can meet my tweet quota for the day. Uh, right. So normally when we have a huge gap down, you normally get that bounce in the first 15 minutes. And I just take a look to see if people have an interest in scooping up stocks, at the lows. That's all. Sometimes we get a gap higher after five or six up days, and I want to see if people are selling. But as far as what it is that I do, my work is pretty much all done pre-market. I already have my list. That's my list for the day. And whatever I buy for that day, there's a 99.9% chance that it was already in my list previously. That is it.
So you're doing the work beforehand and prepared, which is the right thing to do.
That's all I do. That's all I do.
Let me see. Fastly, Datadog, AYX, Zoom, not able to break their highs recently. Is the work from home trade not as lucrative now? Will these stocks now be basing for a while or fall like Fastly did? Great question. I don't know. These are very highly followed names. I would just say use the 10-week or the 50-day as your guide. That's the area of first level of strong institutional support. And also what I like to do is screen through a lot of the software names, if that's what you like to trade, and see the ones that are holding up better versus some of the others. Like ServiceNow had great earnings and bounced off its 50-day. That seems to be holding up better. So it's a tough question to answer if all of these are going to base or do what Fastly did, or some of them are going to I like to find the ones that are showing good relative strength, but I definitely think some of these need a little bit of time for sure.
Right. And I think, people who own these stocks, my suggestion will also be that diversify your sales. So sell some on the way up, maybe 25%, trail some with a 20% stop, sell some if it closes below the 10-week moving average, and leave a piece for the 200-day moving average. And hopefully your first sale might be your worst sale or your best sale, but you average it all out. Because we're not going to know what ends up happening is, let's just take a look at, I got a friend who owns Penn, and he's like, I was going to sell it at 65, but then it kept going up. I'm going to hold on a little bit longer. Then it was at 70. I'm going to hold on. And then what happens is that it loses, 3 months worth of gains in a matter of 2 weeks. And now he's not selling. Now he's going to wait for it to come back. Now, if you diversify your sales and you sell someone that breaks the 21 day and the 50 day, then it's all going to even out for the most part.
That's a great point, and I want to go through a few of these names because this is where, Fastly. I'm not going to pick on Fastly, but I'm going to say when this thing formed a base here, and if you bought this properly in the 90 to 95 range when it tightened up in here, 95 to 90 to 135 is over a 50% gain. If you bought Datadog coming out of the base here and it ran from 90 to 118, that's a 25-30% gain. If you bought EXPI off of this high tight flag here at 40 to 60 is over a 50% gain. I can give you a million of these, DKNG or like Penn, from 40 to 64, over a 50% gain. You get my point. When stocks break out of bases and they go up 20, 30, 50%, if you're a trader, you got to take something off the table. Like you said, vary your sells or something, but you got to take something off the table, especially because 50% of breakouts come back to retest their pivots. So these are the decisions you have to make. Now, some people might say, well, what if it goes higher? What if FOMO, this and that? There is no FOMO if you bought it properly and made 30, 40%. There's no FOMO. You didn't miss out. You actually made money. So I'm a fan of taking those profits and doing your best to compound that over time. I think that it's taught too much. Oh, go for these monster winners. If you're going to go through monster winners, it's going to involve a lot of patience, and B, I think it's just hard to find those stocks that are going to go up 2, 3, 400%.
And if you do, you got to have the ability to sit through some serious corrections. And
Correct.
I think that also either people are not, maybe people are not, look, maybe they don't think 40% is enough in a matter of a month. Maybe they're not buying correctly. Maybe they're just, the stock goes up for whatever, however many days. They finally get to it. They finally hear about it and they buy it at the wrong time. And then it immediately goes against them.
Yeah. One thing, I'm not going to like toot our horns, but one thing we've been doing is doing this for a long time is we put in the work. We're looking for those safe entry points and we're trying to buy them as they're emerging out of consolidations, not when the entire world is talking about it on social media and they've already gone straight up in the air.
Right. So let me take that opportunity, Joe, for a little plug. They can go to you because you do this work for these specifically for these growth stocks. Am I correct?
Correct. Yeah.
On a daily basis, in your educational product, which is at joefami.com. Or if you don't have the time, you have people who manage money, you have people who have services where you can pay to get this information. You can get whatever it is, these stocks before they actually move.
Yeah, one of the things we both do is this involves time. This is our profession. We're passionate about it. Not everybody has the time to do this, so they hire someone like me or you to do the work for them, and there's nothing wrong with that. I don't do it every day. It's twice. You provide every day. I provide twice a week, Wednesdays and Saturdays. I like to do it on the weekends to prepare people for the week, and then another video on Wednesdays to see what's happened so far on the week and if there's anything else for the remainder of the week. I'm doing regular webinars, answering a lot of questions. There's a lot of education. And I appreciate the opportunity. I think there's a lot of people who don't have the time to do it, and that's what we're doing for them.
Right. All right. So any thoughts on the COVID stocks getting slammed with the COVID on the uprise, Etsy, Peloton, Zoom?
Yeah, that's a tough one. That's a tough one.
Right. So it's on right. I think that people, I don't even want to talk about this thing because I think people are looking at the data and they're not as fearful as they were before. That could be part of the reason. I think if I saw something today, if I'm not mistaken, that COVID cases are, they've gone up 5 times what they were back in March, but the deaths are all, we still have very low deaths compared to what, as far as cases is concerned. So that could be part of the reason.
There's more. There's more testing as well.
More testing as well.
I know, and then it's because nobody knows the answers on a lot of this stuff. It becomes such a big political debate. So I don't know. I don't know why with COVID going up, why the stocks are going down. As I always say, I've said this 10 times already on this call. It's not the news, it's the market's reaction. The market is telling you something. The market is smarter than us, and it's giving us clues both to the upside and to the downside.
Right. And even let's forget about this, the Etsy, even the little biotech stocks, the ALTs of the world, the APTs, the CODX, they have not been moving up with the COVID cases like they were back in March,
No, I saw
April, May.
QDEL, which is for testing and so forth. But I mean, this thing went from 300 down to 130. It's a looser name. But you're right. Some of these other ones have not been participating.
Right. Even Abbott, let's just even Abbott. I mean, it's just
Yeah,
went to 50-day today.
yeah. I mean, look, the market right now is a little bit shaky, and I just think you need to define yourself. If you are a long-term investor, you know, I think you should be off margin right now, but do what works for you. And I also think you should maybe cut some of your weaker stocks to just have a little bit of cash, just in case, because for people who opt on late, when you get this gap below the 50-day, it could turn into a potential correction, or it could just be like a Brexit where we just go down and have a quick shakeout. I don't know which one it's going to be. Nobody knows what it's going to be. So just in case, if you're, have some stocks breaking down, have a little bit of cash in case this gets worse. Now, if you're a trader, what I do is just keep your position sizes smaller.
Now, let me ask you this, Joe. You have a much better memory than I do when it comes to this thing. Now, do you remember right on that COVID break back in was it March that we broke it when we got
Yeah,
down below
yeah,
the
and
50?
end of February right here.
Right.
Yeah.
Did we have a lot of setups back then? We did not, if I remember
No,
correctly.
no, and then what happened is, even if you get the right on that, let me pull out the crosshairs here. So this date is, so people can look on their charts if they want to, is February 24th. We gap down. Now you're right. Let's take this example, how I would do it in real time. You're right on the 50-day, same thing. Let's see if we bounce here. Maybe this is just an overreaction or whatever. And then what ends up happening is you get more selling. And now we break significantly below the 50-day and nosedive to the 200-day. And there were just no setups at that point.
No, but before that break, we didn't have many setups.
There were a lot of stocks that already ran. I remember I traded Space, and Space before that break already ran.
All right, they went parabolic, Space, Tesla.
Yeah, there were a lot of stocks where they weren't setups because they already, you can't see it on the chart, but yeah, Tesla split adjusted ran right into that.
Right.
So
was it, Tesla, Space. Yes.
yeah,
They
there were a
went
lot of
parabolic.
stocks that just, I'm trying to think of some software names, but there were, I can't remember right off the top of my head, but there were some software names that also, ran a little bit ahead of that. Docu went up like 30% ahead of that. So,
What about with the Brexit? Do you remember if we had a lot of setups before?
yeah,
We
that's
got
a great
down?
one. There were tons of setups in semis, and I think that's what tips it off a little bit. Is there were tons of setups in semis. I have to go back to 2000 and what was that? 16 was Brexit.
Mm-hmm.
This was right here in semis. There were tons of setups right in here. And I said, this is weird. This Brexit event, is this really going to affect the markets? But that's a great point. If you find a lot of setups, that usually is a good sign. And that was a sign that not only were the semis breaking out of this range, but then ended up going on to become a pretty big. So yes, there were a lot of setups around Brexit. You can see here, this was right around Brexit here, end of June of 2016.
And we're not seeing that. And even if we go back to October of 2018, where I think we had a decent run up in August and September, I think, and then the setups dried up before we had that big move down. Was it 18? Yeah, it was 18, 2018.
Yeah. In the fall, you mean, before that big move in the fall?
August, September, I think we had a nice move in August and September, but at the end of September, those The setup's completely dried up.
Yeah, yeah, that's a great point because I just didn't even think about this in real time. We're basically curious to see if this drop is going to be bigger or it's going to snap back. And I think what helps to kind of answer that is if there's a lot of setups beneath the surface. And right now there aren't, but keep in mind, at least I'm not finding too many, but keep in mind things can change quickly.
And that's the reason why you do your homework quickly. Any thoughts on data? Yeah, we spoke about the Chinese names that have been holding up extremely well. DADA is one of them. I
Yeah,
mean,
that's a recent IPO.
yeah, it looks beautiful.
Yeah, a
Wow.
lot of Chinese names are holding up well. Some of these are bigger cap names. Someone says I'm a subscriber to both Joe and Frank. My trading has improved so much, and you guys have helped me a lot. I appreciate that. That's awesome.
Did you
Thank you.
pay that? Did you pay that guy?
Yeah, checks in the mail. So thanks for that's no, it's nice to hear once in a while because you get a few trolls on here. So it's nice to hear a couple nice things here. Let me see. What do you consider a high growth rate? Is it 20% or 40%? I assume you mean a high growth stock. Traditionally, earnings and sales growth of 20% or more is what I consider a growth stock. If it's compounding and year over year 20-30% growth rate is what I consider. If it's single digits, it's one of those slow and steady ones. And then if it's like explosive 50% or more, that's obviously a high octane growth name, but I would say 20% or more.
Right. What about Unity? You.
Yeah, that IPO, that could be a high tide flag. It IPO'd at 52, shot right up to 100. And I will definitely say it's acting very, very well. It pulled back on some light volume. It doesn't have a lot of price history since it just IPO'd, pulled back again on some light volume here. And it's acting well, and it's got great revenue growth. So yeah, it's acting well. And now I think with some of these like Unity, Frog, because Frog I thought could have been I didn't trade this one. It could have been a high tight flag at 90, and then from 90 down to 76 percentage wise is a big drop. Same thing with Snowflake. With some of these that don't have enough price action, enough price history, and they are volatile stocks. I'm not opposed to trading them. I just think you got to go with a smaller position because they will move 10-15% in a day or two intraday even. So I think you got to go with smaller positions so you don't get tossed around.
Here, Joe, do you still own Zillow Z?
No, I'm no longer in Zillow. I'm no longer in Zillow. I had a great run with it. I'm no longer in it. I am going to look to get back into it. But I was in it in the 60 range when it broke out of the space. And I've been sticking with it for a while. I still like it longer term, but this is what I mean by everyone has to make these decisions based on your own time frame and so forth. So, did pretty well on this run up here. And then I got stopped out on the way down. I'm going to wait for it to reset, but I will look to get back into it.
Right. Here's a good question. Are you selling at your stop immediately, or are you seeing how the market handles your stop, specifically if your stop is near a logical support level?
You want to take that one?
Well, for me, and only for me, my stops are predefined. So when my stop is hit, I take my loss. I am not looking to see how it reacts to that level or whatever level, because my level might not be the market's level. And since I predefine my risk before I put on the trade, that means I've already accepted that it could become a loser. So that's with 99.9% of my trades. Anytime that I feel that I'm getting emotional because it might be something that's logical, like for example, let's just punch up DKNG, right? This would be an emotional trade if I taken this trade on some type of support back at the breakout level. And I would have said, okay, let me see how the market reacts to this level. And I probably still would have held it because this is something that would be an emotional trade for me. So I predefine my risk, which means when my stop gets hit, I'm taking it. Anytime that I don't, 9 out of 10 times, I lose more money. And anytime I get emotional in regards to a stop or a setup or a stock, I put in a physical stop.
Okay. Somebody asked about GDRX, which is GoodRx recent IPO. That's why I just pulled that one up. Um, I'm going to wait for an IPO base on this one. It's a pretty big cap stock for an IPO, 20 billion market cap. I like to wait for more price history for an IPO base before I'd look to get in. But like I said, you can trade any of these IPOs. I would just keep them small because there's not enough price history.
Yep, I seen that. I bought this stock today. This is one of my setups.
Oh, you
Down,
did? Okay.
yeah, down multiple days in a row up to the previous day high. But I'm a short-term trader. I'm looking for the next 0 to 5 days.
Yeah, no, I mean, it's definitely got support here. I mean, it definitely,
Yeah, I'm not even looking at support. It's just like, for example, I bought this. I bought it on 10.5 at 51.13. I bought it on 10. What is this? 10.6. Where is?
10.5. Okay. I see
Uh,
that. Yeah, no, I know what you're doing. You're buying some of these pullbacks on light volume on, trying to get the reversal and the pop. So you can trade them. You can trade them for sure. I mean, you can trade anything. I just think personally, I would go lighter positions because I like a little bit more price history. But if you did this with this one or off of Snowflake or even with Unity, you had some nice gains on these.
I think what's important is that whatever it is that you do, like anytime someone's asking me a question about a stock, I'm always saying for me, for me, for me, for me, for me,
Yeah.
because what might work for me might not work for you. And there's a lot of different ways to skin a cat. You just have to have clarity in what it is that you do and make sure that you have a plan with what it is that you're looking to do. So
Yeah,
that
I
way,
mean, that's a very important point. We say this what I would do, but you have to do what works for you. But I don't mean to be rude saying this. A lot of people don't have plans, but you need to put a plan together.
right,
Fetch FTCH is holding up well. Someone asked about this one. This was on my screens tonight. As far as even though I'm cautious right now, I still keep a watch list. I still screen, still put in the work because one, you got to stay on top of the markets, and two, things can turn around quickly one way or the other. So I still have a watch list here. I had Fetch. I'm trying to see what else. There was like three of them, I think, when I screened. I just can't find that in front of me here. But yeah, these are some ones that have held up pretty decent. Fetch HZNP. I just found them, was holding up HZNP, if I can type. This, hanging around its 50-day. It's on my watch list. I don't own it. And then SE, has been holding up very, very, very well. I'm not in this one, but I'm just trying to keep a watch list of stuff holding up well.
yeah. Well, what's your view on the solar stocks? I just punched up JKS just quickly. What's your view on the solar stock? We know that first solar reported just recently, I think, or yesterday or
Yeah,
2 days ago.
they've had great runs. They've had great runs. This is the whole thing. TAN is the ETF where they pricing in a
A Biden win.
yeah, Biden win. I don't know. I don't trade the solars too much. So
Right.
let me see here. Um Thoughts on Square. We'll take a few more and then we can run. Thoughts on Square. It came out of this sort of 7 week flat base, if you want to call it. It consolidated when the market came down in September and then broke out of it. And it's right down to its 50-day. I like the payment stocks longer term. It's just sitting right on its 50-day. They got earnings coming up next week, but it looks decent. It's at least it's holding up support.
Yeah. Here's a question. I don't. Things change quickly. What are you looking Joe said things change quickly. What are you looking intraday to give you confidence to add to your positions or start a new one? Do you look at stuff like that
Say
intraday?
say that again. If what?
It says here, Joe said things change quickly. What are you looking intraday to give you confidence to add to your positions?
I watch a lot of relative strength intraday. I like to, if we're in a good uptrend, and I like to watch how it's acting. So if we get sell programs during the day, things that are holding up well during even intraday sell programs, I might add to. But I'm usually adding when we're in a good uptrend. So right now, with the market in this mini correction, whatever you want to call it, I'm not really looking to, because I want to have. You talked about the 21 day, the green line here, the 21 EMA. Excuse me, I want to have the wind behind my back knowing we're in a strong uptrend when I step on the gas and get aggressive. When we're pulling in a little bit and I'm not finding any setups, then I won't have much conviction in my trades. But I use a lot of like intraday price action, especially if you get these sell-offs during the day and things are holding up better. I might add to a position.
Right. It says here also, would you say that pin snaps and Neo are going parabolic? I don't think
These
so.
are earnings gaps. Pins was, I mean, it's definitely, I wouldn't enter it
I
here. I
wouldn't enter
mean,
here either, but I don't. Yeah, I think for me, parabolic is not only price action, but it's also sentiment. People are talking about it nonstop, nonstop. That's normally when you start hearing all these crazy predictions about a particular stock. We're not seeing that with with the pins or the snaps of the world. When Tesla went parabolic at the beginning of the year, someone said that if who was it? If someone and someone else had a baby, it would be Elon. When you hear that type of stuff, that's when I think parabolic is not only price action, it also has something to do with sentiment. And we're not seeing that with Pence. I wouldn't enter any of these trades. I mean, Pence is overextended. I would not enter it. I wouldn't, that's not my definition of parabolic. My definition of parabolic was Tesla back in February, was beyond a couple of years ago. Tilray when they hit 300.
yeah,
That to me is parabolic. There was sentiment behind
GoPro. Yeah, there
GoPro,
was a few of them that just were the
maybe
whole
even
world.
space Virgin Galactic that it was trading on they were going to make money 10 years from now.
When you're right, when it's not just the price going up, it's the sentiment behind it when the whole world's talking about it. That's when it gets too euphoric. Um, and then somebody else was asking about FV5 or FVRR. This one's been a monster. It just needs to build a new base. It held its 50-day off of its earnings the other day. I just think, the original base was down at 30. That's what I was talking about with some of these stocks, from 30 to 150, 160. Same thing with Livongo and same thing with Peloton and some of these names. Yeah, they're great companies, but just keep in mind, the original base on Peloton was 37 to 140. I mean, take it easy. Let it build a new base here. It's extended from its original base and just needs time to build new bases, in my view.
Right.
And like I said earlier, the more you study charts, you'll understand what's extended, what's normal, what's not normal. You made a great point about marking up these charts. So I think so many people just cry and say, why isn't this going up every single day? Well, when the more you study charts, you realize that they don't go up every single day, so you'll understand when things get a little bit extended, that they need to reset and build new bases.
Right. Right. I think it's time to go, Joe.
Yeah. No, thanks for doing this. I appreciate it. Thanks everyone for all the awesome questions. There was a lot of spam on here, I see as well, so I might have missed a few questions. There's a lot of spam messages on here.
That's good.
But that's good. That means people are paying attention. That's good. All right, thanks, Frank. Thanks everyone for being here. Have a great night, morning, evening, wherever you are in the world.
All right. Thanks, Joe.